bringing Scott Bauer to trade it. It's the morning trade. He's the CEO of Prosper Trading Academy. So Scott, target tomorrow morning. You ready?
Yes. Tomorrow morning, I agree with almost everything that Alex just said.
Almost.
Brian Cornell, almost everything. Brian Cornell, CEO there, you've got to have belief in him. This guy has a nose to make things right. He is one of the most proactive, not reactive CEOs that's out there. So in terms of what Alex talked about with online sales and everything, Target is hitting on all cylinders. I also agree that earnings are priced for perfection. And given what we saw in Walmart with a nice pop right off the initial earnings report and then kind of just falling back to where it was, there definitely is some skepticism, but I believe that Target is set up for that perfection and is set up for a nice big higher after the earnings tomorrow, and I think that we're going to get to new highs.
So, okay, for Target, it's down 1% today. I mean, we've got a little bit of fear with all the retail stuff. By the way, e-commerce sales just came in, and they're at 5%. Compared to the 4.8%. So we like to track this number. I mean, Scott, we've seen that the consumer's still spending. That's the key part of this economy that hasn't broken yet. So for Target, to your point, I mean, given what Alex just told us about their e-commerce growth, it's hard to see why this doesn't go straight to the bottom line.
I totally agree with that. And again, Brian Cornell, he's so proactive with these initiatives. So here's what I'm doing, Oliver. It's a little bit of a combination trade here. And the only reason I'm doing this is because I want to buy Target if this thing falls down a couple dollars here to the 50-day moving average. So I'm selling the 109-106 put spread just below the market here. I'm also buying the 112-115 call spread. It's kind of known as the Texas hedge, uber bullish position here. I can do this whole thing for zero. Doesn't cost me anything. I'm not collecting anything. My risk is that the stock does fall. However, I'm capping that risk at the $3 wide put spread. Okay, so I am willing to do this because I don't mind buying Target if it does fall down. However, I think off of the opening tomorrow, we get an initial pop-up, and this thing is going to be very profitable.
Yeah. So, Scott, to the Texas hedge, right? Because there's a huge gap on here, and I got to say, it's still a little bit glaring. If you're a believer that those eventually get filled, that's a bit of an uncomfortable situation. But it also suggests that analysts have not done a good job getting their head around the expectations, given how much Target beat those expectations.
You know, there's just so much unrest in the analyst community really looking at retail stocks in general because they don't know how much to really bake in what the concern is with the tariff issue. Is the consumer going to keep spending? Is this going to continue through the holiday season? But again, based on almost everything that Alex said, I love Target. I love the initiatives they've put in here. And I think they are really cut out to withstand what's going on with the U.S.-China talks and really head in strong to the holiday season.
All right, selling the 109, 106 put spread, buying the 112, 115 call spread. So we'll be looking for the move tomorrow morning. Scott Bauer will follow up. Appreciate it, sir. Scott's the CEO down at the CBO of Prosper Trading Academy. We'll be right back.